everybody. So I'm here with Jack Bertolone, who is Senior Mortgage Consultant at Brooklands, who I've worked with for many, many years. And what I mainly know about Brooklands is that you do all the standard mortgage stuff. That's right, Jack. But when it comes to things like portfolios, limited companies, trusts, or anything complicated that other mortgage brokers might steer clear of, you're right in the thick of it. And you can pretty much manage to do what most aren't. Is that right?
Yeah, correct. I couldn't sum it up better myself.
There you go. So what we thought we'd do today is just really chat with somebody that's got real experience of day-to-day buy-to-let and the housing market, and really making sure you can get the finance through, which is going to be critical, I think, over the next 6 months. And myself, with all my kind of stats and figures, just to give you a little bit more of an insight of what we think is going to happen, what's happening at the moment, and where we might be kind of this time next year. So crystal ball, holy grail, that kind of stuff. I'm very much relying on Jack here for that. Really, I guess the first question, Jack, is how has this been for you? I mean, what it's been like having your sort of business shut and then the market shut rather, and then suddenly it reopens again. What's been happening?
Yeah, certainly. So, as with most industries, we were essentially put on ice for 2 months. So there was very subdued to little activity happening in the market. I mean, unless you had an offer already issued, pre-lockdown, some lenders were trying to muddle through with new applications by the use of automated valuations, but they weren't suitable for all transactions. I mean, if it was a HMO, a multi-unit property, any property with a commercial element, new build flats, they weren't suitable for AVMs. So essentially, a lot of the business that we deal with was put on hold for 2 months. But what we have seen is that lenders have returned to market, and I'd say in the past 2 months, the previous 2 months of work, which was put on hold, has all come at once. So activity is starting to pick up again, and we are getting new instructions, but it was certainly challenging for a couple of months being put on ice, effectively.
I can understand, but you're happy bunny now. There's plenty of business coming your way.
Yeah, I mean, the market's turned a corner, I think, with the reintroduction of physical valuations. A lot of lenders that had put on hold on applications or reduced product offerings have returned to market. So, in the most part, most applications can be placed now. I mean, is that what you've really seen in the statistics side of things as well?
Yeah, I mean, I think Rightmove are almost exploding with joy over the last few weeks with the stats that they've had in. And obviously,
Sure.
Rightmove Index is very much reflects, I think, how sellers feel the market's going to go, if you like, along with some agency input, of course. But I think, forgive me for looking down a little bit, there's so many stats here. They had... in England, the average asking price was 2% higher than it was last year, which just blows away all the forecasts of 13 and 16% falls. We might still get those, but it's certainly not happening today. I think in their latest data, they were looking at the number of sales agreed were like 3% lower, just 3% lower, which absolutely matches your experience. And I think these are the incredible figures. They're looking at, so in February, before all of this kicked off, if you got a house with an asking price of £100,000, for example, or where you are £500,000, then it was about, they were achieving about 96.6%. So that's a good amount. 95% is kind of a normal market. Anything of that, I think, is a little bit high. But actually, they're receiving up to 98% at this moment in time. And some of the agents that I've been speaking to, one of them, this is in Nottingham, they normally do about, a small agent, they do about 5 or 6 sales a month. And they actually closed 5 new sales in 1 week in June, which is gobsmacking. And they've got people ringing up going, oh, we want a deal because this market's going to go everything. And he goes, well, that's lovely, but I've just sold that property for over the asking price. So we have come back. We knew that kind of post-lockdown there was going to be lots of activity because of, like you say, all the sales that couldn't go through. And there was about nearly 400,000 of those. Knew that would rush through, but I don't think anybody really expected the market to come back in the frothy way, for example, that it has at the moment. I'm not sure it's going to last. And certainly you look at Savills have been this kind of first out of the I don't know, paddles, whatever it might be, or the post. But they've come up with some really interesting forecasts. And this year they were forecasting a kind of 1, 2, 3%, a little bit of growth. Now, last week they came out and just said everywhere's going to go down by 7.5% by the end of this year.
Oh, wow.
Everywhere.
Drastically.
And I mean, you must notice this with what you do. I'm really questioning whether we should use average house prices for regions now, because I'm just finding that more and more individual house prices are differing, i.e. some are falling by way more and some are just not falling at all. So
there's such a localized situation going on. I mean, it can even come down to street by street, not even by definition of postcode or general area. So we've certainly said. Do you think there's going to be a bit of, you mentioned about another lull? Do you think that's going to come from sort of the lag in terms of how long it takes to complete a property transaction? So, for example, we had the 2-month pent-up demand, which is sort of filtering through now.
Yeah.
Obviously, if agents are agreeing sales now, theoretically, those aren't going to complete for perhaps 2-3 months or longer, depending on the chain. So do you think that's going to sort of cause it?
I do. And I think it's one of the things that I was involved in was looking at getting the government to make the furlough scheme as flexible as possible, because we recognise that people like yourself would be incredibly busy for the first 6 weeks while we got all the lagged sales going through and these sudden new sales coming through. But then whether it hits middle to the end of July and runs through to the end of August, there's going to be a lull in activity, and more importantly for the industry, a lull in the money that they can earn. Because that cash isn't going to come in. Their cash doesn't switch on the day you open. Their cash switches on 3 to 6 months later.
Of course. Yeah.
So for the industry, this is actually not a 3 or 4 month lockdown. This is a 6 to 8 month lockdown potentially, because it's going to take so long for the money to start kicking in. And hence we wanted as flexible a scheme as possible, so you could bring people on part-time, put them back on furlough, etc. Because it is going to be quite a tough ride, I think, late summer. On the mortgage side, I'm not sure that would be the same, because I do think there's still quite a lot of remortgage activity.
There is, yeah. I mean, remortgage activity, most lenders are still open to that. And even if you've deferred your mortgage payment, as long as the conduct prior to that was okay, most allow you to still do product switches, so you're not stuck on the variable rate. So in the most part, there still is home for that type of business. Just going back on what you said about sort of your agents have sort of been seeing an increase in sales. I'm just looking at sort of the latest HMR figures here, and it does actually show that property transactions were up 16% in May compared to April. I must put in a caveat that is still lower than the May figures of last.
Kind of weren't open in April.
But I mean, it's positive though to show that the market is picking up again, and it is increasing. So that's the positive side of it. I mean, even non-residential transactions have increased 40% month on month as well. So it's both residential and non-residential property.
Yeah, and that's quite incredible, because you must be nervous about the commercial market. I have to say that's not my bag, but if I was a commercial landlord with everybody working at home as much as they can, particularly in somewhere like London, I'd be a little nervous right now. What's your take on that?
Yeah, no, it's certainly true. I mean, what we saw is that in the residential and buy-to-let markets, things have pretty much got back to normal. I mean, there is less products available, but most business can be placed. 75% loan to value if the stress test fits. There's still opportunities there. Commercial, on the other side, lenders are still being an awful lot more cautious. Many of the traditional lenders that would look at semi-commercial property, for example, when they assess those deals now, they don't actually take into account any of the commercial income. So they're expecting, even if it's tenanted, that perhaps that tenant might not be there in 6 months or a year or 2 years' time. So that's the only market that hasn't really caught back up yet. And honestly, I don't think we're going to see them actively re-entering that market until we know the full repercussions of all the government initiatives that have taken place. You know, the ending of the furlough scheme, self-employed grants, the reduction of the mortgage payment holidays. Until those have all worked their way out and we see what position businesses are and how many of those commercial businesses are still going to be there, I don't see lenders really attacking that market too actively at the moment.
Yeah. And what's your experience? I mean, we hear on the mortgage side, I can almost think if I'm in your situation, if I'm doing your day job, I'm probably getting pinged 100 times a day with what lenders have changed. Because even I'm getting loads of changes through, and I'm not dealing with mortgages on a daily basis like you. But my word, it just seems the news is just coming thick and fast. What's your kind of take on, if you're kind of like, where am I sitting if I'm a first-time buyer? Where am I sitting as a buy-to-let investor? You know, what are these guys up to? They're kind of going nuts.
Sure. First 2 weeks of lockdown, it was crazy. Lenders' criteria and product ranges were changing on a daily, by-hour basis. Sometimes you'd get an update from a lender in the morning, and by the afternoon, it was no longer relevant. They could have changed it again. Yeah, it was quite challenging.
You wonder how on earth anybody that isn't, I always see on the social media side, why do I need a broker and why can't I go just straight to lender? But certainly the buy-to-let, I think if you're a first-time buyer, a buy-to-let investor or a property investor, you'd be kind of mad to go, I think I'm allowed to say this because it's my opinion, but working without a broker, I don't know how you'd get the right deal, because it is a full-time job just trying to keep up with what's going on.
It is, yeah. I mean, in the current climate, it's only exacerbated it as well. I mean, you're seeing, you know, like you say, so many criteria changes. You know, the broker is worth his weight in gold at the moment, especially if it's a non-standard transaction or something a little bit quirky about it. You know, even lenders that would traditionally always look at a certain type of transaction pre-lockdown, perhaps that's not their cup of tea anymore, and they've adjusted their risk appetite, and maybe you're now looking at the next tier of lenders or whatever it may be. I mean, I think the biggest change we've seen in the mortgage market, not only with the commercial side, is actually the residential mortgages, and these are some quite fresh changes within the last week or so, really, in terms of the higher LTV mortgages for first-time buyers has reduced massively. Which is going to have an effect because, for example, Nationwide, one of the largest UK building societies, a huge mortgage lender, especially for first-time buyers, pre-lockdown, 5% deposit mortgage all day long. As long as affordability fits, they would offer that to you.
Yeah.
Now they've just reduced that down to 85% maximum.
I was so surprised at that because it's quite an unusual move for them. I think they were pretty supportive of first-time buyers in the last recession, whereas that kind of really restricts things.
It does. Well, I mean, effectively, it's tripled the amount of deposit that you have to now put in. So whether we're going to see a divergence of more first-time buyers that have got help from mum and dad, the bank of mum and dad that can give them larger deposits, perhaps they're going to be able to, get on the market and get some good bargains. For those without that availability of family money, it's going to be extremely difficult to raise a mortgage with a small deposit, unfortunately.
It doesn't mean it's impossible though. You still got help to buy in the shared ownership schemes, which I believe are still accessible basically at a 95% rate.
Yeah, indeed. And I mean, I even saw some articles that were mentioning about help to buy. There's discussions that it may be extended. So, that could help massively if that is the case and it does come through to fruition.
Yeah.